Welcome back. You're watching Traders Corner. I'm Bronwyn Seaborn, and with me at the desk as usual is Garth McKenzie, founder and editor of Traders Corner. Garth, thanks for your time today.
Thanks. Hi, Bronwyn.
So global markets kind of under pressure this past week, and the S&P 500 no exception to that.
Yes, it's been quite a week. Last week we sat here and I was going on about this upward sloping channel on the S&P 500 that's been intact for forever and ever, it seems like. And now things have changed, and when the facts change, then you change your opinion. So let's have a look at the S&P 500 chart. There's that upward sloping channel that we've discussed at length on many shows throughout the last number of months. And last week on the show, I said to you that the market it appeared as if it was pulling back, but there was some lateral support evident at around 28.70. And as long as that level held, then we would still be comfortable. Well, of course, it didn't hold. You can see quite clearly it's collapsed through the bottom of that support area. It's broken down through the bottom of that upward sloping channel. And it went all the way down to the 200-day moving average. And in fact, it's gone and flashed down through the 200-day moving average quite convincingly over the last couple of days. And for the time being, appears as if it's struggling to regain the 200-day moving average at the moment. But let's see. I expect we probably will put in a bit of a choppy bottom here and then maybe a little bit of a rebound. But the thing is that some fairly meaningful technical damage has been done to the chart structure here. The fact that it's broken below that 28.70 level and below the bottom of that channel is quite meaningful. So whilst I think there's a chance that we do get a bit of a bounce from these sort of levels, do keep in mind that it's going to run into quite stiff resistance up here at around about 28.50, 28.70 if it gets there. So it's not looking too great, let's put it that way.
Also not looking great here at home. Naspers continuing its downward spiral and kind of taking the JSE with it. When we looked at the top 40 future, you said that 49,000 level was quite significant, and we did break through that, which could spell more weakness, and that's exactly what we've seen, right?
Yes, that's it. I think viewers were at least quite well guided on what was potentially going to happen if Naspers broke down. We spoke, I think, 2 or 3 weeks back on the show and said that the 3,000 Rand level on Naspers was a really important support level, and if that broke to the downside, then it could open the floodgates somewhat, and certainly we've seen that. I mean, Naspers traded down to 2,500 Rand a share during the last week, and with that, obviously, we've seen the top 40 future breaking down very aggressively as well. You mentioned the 49,000 level, and you can see the significance of that on this chart over here. It's a major lateral support level that has been tested on multiple occasions over the last 6 months. The fact that the market is now broken below 49,000 is quite meaningful. And again, like what I said on the S&P 500, it's probably going to put in a bit of a choppy bottom here. And if we do see a little bit of an oversold bounce, do keep in mind now that 49,000 area that was previously such a strong support zone now becomes a very, very meaningful resistance zone into any rally.
So given all this market weakness here, it's about picking the gems, I guess, and Sibanye Stillwater certainly being one of the gems for us. So let's quickly take a look at that trade.
Yes, obviously we've had a trade on this stock, which I'm very pleased about, and because you didn't have too many places to hide in the market over the past week. Yeah. But the gold sector has actually been one of the areas of the market that has really performed very, very well during this market carnage. And Sibanye Stillwater being one of those stocks, it's had a tremendous run. And I suppose we were, you can say a little bit lucky, but I think also there was a certain element of good reason for being in this trade. It was exhibiting good relative strength. There were a variety of reasons why we were in the trade. So it's played into our hands very, very nicely over the past week. And we have taken profits on the trade now. Just to look at the technicals, you can see this large inverted head and shoulders pattern that I'd identified previously on the show. We went in and we bought 6,500 CFDs onto this in this pullback in late September. And we went long at 8.89 with a stop loss at 8.35. And at the time, I said I was looking for a move to 10.70 Rand, 10 Rand initially, and then 10.70 Rand. 10 Rand is the neckline of that big inverted head and shoulders pattern. And you can see it got there. And last week, I was sat here saying, well, I was wondering whether I should bank profits or give it a chance to try and run through the 10 Rand round figure. I did give it some room to run, but unfortunately, or fortunately, I mean, take your pick really, but we ended up getting out at 10.70 Rand, which was the level that was my second target for this. So it worked out very, very well. I mean, we made 11,245 Rand on this trade, so it's probably one of our most successful trades of the year in terms of the quantum of profit that we've made. Where I say it's a little bit unfortunate is that look how much further it's run. It's gone all the way up north of 13 Rand per share. And I've said it so many times on the show, and I'll say it again, knowing exactly when to sell is still, for me, the hardest part of trading. Because at 10 Rand 70, I thought, brilliant, we're out, we've done really well. And only to see it quite a bit higher a day later.
If only we all had crystal balls and we could see what was coming up ahead, right?
Yeah, well, exactly. If we all had a crystal ball, it would be much easier.
Absolutely. So then let's take a look at last week's trade, which was that pre-trade that you initiated between Zeda and Pioneer. How's that working out for us?
Yes, it's working out for us quite nicely. We've still got the trade on, and I'm not banking profits on it yet. Just quickly, what a pairs trade is, what I explained last week, is where you go long of one stock and short of another in the same nominal value. And effectively, you're looking for the one share to outperform the other one. In this case, we've gone long of Pioneer Foods and short of Zeda. There is a cross-shareholding structure there, which we discussed on last week's show. This graph here is a normalized graph of the two share prices overlaid against each other from the beginning of this year. And you can see that they do typically track each other very closely, but of late, there's a gap that's opened up whereby Pioneer Foods has underperformed Zeda quite meaningfully. So that gives us the opportunity to try and take advantage of a closing of that gap that should take place. And to do that, as I said, we've gone long of Pioneer Foods and short of Zeda. If we present it in a different way, this is a relative strength comparative graph of Pioneer Foods share price divided by Zeda's share price. So you do that each day historically, and you then plot the findings on a graph. And that graph that we see there is essentially that relative between Pioneer and Zeda. And you can see that if you just draw a line, sort of eyeball a line through the middle of all this data here, you can see that the share price of Zeda, of Pioneer Foods rather, has typically traded around about 20 times greater than the share price of Zeda. And when you saw this huge dislocation over the last few weeks here, that is where you look for the opportunity to go long of Pioneer Foods and short of Zeda. So that's what we did. Last week we went long at 74 Rand 74 on Pioneer Foods, and we went short on Zeda at 4 Rand 56. We did 100,000 Rand nominal value on each side of that trade. It means that the ratio is at 16.39. Right, between the two stocks. And I'm now looking for this ratio to bounce, which it started to do. And I think if it starts to bounce back up to this 18, 18.5, 19, that sort of an area, then I would be quite happy to bank profits on this pair trade. For now, it is on the right side of the ledger for us. We're up about 6,000 Rand if we take the two together. So it's looking good. I mean, I may even look to bank some profit on it this week coming, depending on how things play out.
We'll have to see how it plays out, but in hindsight, like we say, is always 20/20. And while you were saying with Sibanye, you wished you'd let it go, it's also about the reverse of that and knowing when to get out. So let's take a look at stop losses, because we were stopped out of both PayPal and NASDAQ 100, which we were kind of maybe a little bit upset about. But having looked back, we were quite right in making that call, right?
Absolutely right. So we had these two trades on not so long ago. It's in our very recent history over the last 3 weeks, really. This first one is PayPal, which is obviously listed in New York. And I went long based on the fact that the share price was trending higher. You can see that uptrend still was intact at that stage. It had pulled back to the 50-day moving average. And in mid-September, we went long of PayPal. And I set a stop loss basically below the lows of the September sort of trading range, and effectively what would have meant a move below the 50-day moving average. And we were stopped out. You can see that we executed the stop loss once the share price broke below that uptrend and once it broke below the 50-day moving average. And yes, at the time it was a bit disappointing. I think we lost $140 or thereabouts on the trade. So not a meaningful loss, but nevertheless, it's always disappointing to lose money. But then you look back now and you look at what's happened to it subsequently and you say, gee, thank goodness we got stopped out. That was the best thing that could have happened to us. And I think that's the critical thing in trading, and it's one of the reasons why we've done well on this show over the last 9 years that we've been doing it, is because we always keep the losses small. And that is so critical. And if you're a viewer watching this show and you're a trader, you know, the thing I can recommend to you more than anything else is adhere to your stop losses and keep the losses small. The winners will take care of themselves, but keeping your losers small is absolutely imperative as a trader. If we look at the chart of the NASDAQ 100, it's a very similar picture. We had been monitoring this. We'd actually traded it twice during the month of September, and the price of the index was trading nicely higher within this upward sloping channel, and we went long in mid-September the second time around. And in late September, I was looking at that thinking, brilliant. It looks like it's on its way to new highs. Nothing not to like about that chart. But of course, when things change, then you have to respond. And it broke below the bottom of that channel. We had a stop loss below 7,400 on this index, and we executed the stop loss, and thank goodness we did, because as you can see now, it's been trading down at 6,900. So it's dropped an additional 500 points in less than a week from when we were stopped out. So it just once again reiterates the point that stop losses are so important to the health of your trading.
Absolutely. So let's move on before we have to end off. We're almost out of time. No new trades this week, but something that has caught your eye is the MSCI South Africa ETF. So why is that on your radar at the moment?
It's interesting to look at. So this is an ETF on the South African market, but it's listed in New York and it trades in dollars. This table here is an illustration of all the world's major markets and shows the performance of the dollar performance of each of their respective ETFs over the year to date. So the top of the pile is Saudi Arabia, believe it or not, Norway, Israel, US. Those are markets that have done okay this year. But then right at the bottom of the pile on the right-hand side here, Turkey in final place with minus 45% year to date. And then second last place is us, South Africa, with a loss of 31% for the year to date on our South Africa ETF. There have been some very ugly performances from other markets around the world as well, but we're the second worst in the world, so we claim that. Here is a chart of the MSCI South Africa ETF. So it's a long-term chart. It goes all the way back to 2002. And what gets my attention here is the fact that this very long-term upward trend that has been in place since the beginning when this thing we first listed comes in at around about $45 per share. Now, just to give you an idea of where it's been this year, it peaked in January at $75 per share. It's now trading below 50 at the moment. And as I say, if it gets down to $45 per share where that upward trend comes into place, that would imply that our market is down 35% in dollar terms for the year to date. Now, it doesn't often fall much more than that. It did during the financial crisis, but I think that was exceptional circumstances. And I'm of the view that if you believe things are darkest before the dawn and that things are likely to improve in South Africa, that Naspers is way too oversold at these levels, that perhaps the Rand could recover next year if we get some better political resolutions, I think that this is starting to look interesting from a longer term perspective. I've been adding it to my long-term portfolio from offshore, and I think I'll continue to do so if it sees some stability around $45 a share here.
Let's take a look at the portfolios then, because our local portfolio, what a wow, it's really doing so well.
It is. It's actually been a phenomenal week. I mean, whilst the rest of the market's been collapsing around us, we've actually had a superb week because of the profit on that Sibanye Stillwater trade, and then also our pairs trade on Pioneer Food and Zeda. So we're up 29% for the year to date in South Africa at the moment. So I'm very, very pleased about that. Our offshore portfolio, there's no change from last week. It's still up 8.8%. We don't have any positions open there at the moment.
Garth, you have a course coming up on the 17th of November, so just give us some insight into that.
Yes, that's right. It's my high probability trading course. I'll be running it again on the 17th of November. That's a Saturday. It's a full day course. I'm again going to run it at a promotional price of 1,990 Rand per person, and I will include a 1-month free subscription to Traders Corner. So anyone that's interested, please email me, garth@traderscorner.co.za, and I'll send you all the details.
Garth, thanks so much. We have to leave it there for today. Garth McKenzie is founder and editor of Traders Corner.